All right. Hello, everybody. We are back. Well, we're not back. We are here for the first time. Tomorrow, we will be back for, as ET FaceTime says in the chat, first market close stream in history. I think maybe like a long time ago, I did a market close stream, like a very long time ago. But I don't remember it because it's been a long time. So we are starting January 2nd, officially doing the market close, and we are here. I'm incredibly excited. You know, there's a lot of news that happens throughout the day, especially in the markets that we're currently seeing, whether it's crypto, stocks, tech news. There's so much geopolitical stuff. So I've got a lot of topics, a lot of stuff to discuss. And really, you know, if you're a junkie for the stock market, if you're just like stuck looking at these charts and these ideas all day, you really get a lot of ideas and you want to talk about them and you want to discuss and see what other people say. So today's the first market close. We will be doing a market close every single day. If I do a market open, I will do a market close. That's just how it's going to work. And so the market close will be 3:45 to 4:45 every day. After the market close, at 6 o'clock, we're doing a podcast every single day on this channel. So far, we have 3 confirmed. One will be with Chris. That'll be more macro. One will be with Steve. That's where we deep dive into a particular stock. And then one will be with TJ, which will be the one today. TJ, the Real Deal, will be talking about options. Anyone who just wants basic understanding of what it means to make some money off of the market without having to buy stocks and play with options. We're going to be talking about that. And that'll be every Tuesday. And then also I made this in the community post from 8 to 9. Today it'll probably be like maybe 8:15 to 9, but around that 8:15 time, we will be doing a live stream every day called Palantir Weekly or Palantir Daily Deep Dives. The name is Palantir Deep Dives, but it will be daily. And that's where we go super, super deep into one topic around Palantir, not news, not stock related, although there is a lot of stuff we have to talk about the stock. We'll be doing that today in the market close. And it will just make you more and more educated about Palantir. So many things about their patents, their government contracts, their history, all these different things we have to connect. The Babcock partnership that was in September, we barely talked about it because it was just one PR that happened. It wasn't even on their website. It was on someone else's website. There's a lot of stuff that I think every single day we can talk about and discuss and go deeper into our due diligence on Palantir. So let's get started with the first official. I'm so fucking excited. Are you excited? Because I'm excited. Market close for 2024. Diane, Doug, Brian Murphy, ET FaceTime, June, Somesh, Justin, Brian, Kelly. Hello. Thank you for being here, Kelly. Ramud, hello. Juan Carlos, Arnie, John, Doug C. I was ready for the market to close when it opened. Yeah, well, we got to talk about that. Justin, Brian, Lang, Dr. Zango, Matthew, good afternoon. Matt Blake, Yao, Jeremy, Invisible Voices, Adam, Midwest, Garcia, David, Alto, Matt R, Cool Comic Guy, D. Edwards. We are here, and let's get started. So I think the first thing we'll do is quick Palantir news. We'll do quick Palantir news. And then we'll get into the broader kind of market itself. We're saying we got 12 minutes until the market closes. We will have a closing bell because, you know, we get to hear the bell 2 times a day. We gotta put on the bell. If we have an excuse to ring the bell, we're gonna ring the bell. All right. So we do have some interesting Palantir news that came out today. Palantir's NHS contract has been achieved a month ago, $480 million. Here was the breaking news that came up this morning. This was incredibly interesting to see this. I tweeted this, 12:18. So this was after the market opened. One of the biggest concerns for Palantir was that people were going to opt out of the NHS contract. Why were they going to opt out of the NHS contract? Because they would be super scared that like the data was being used, yada, yada, yada. Apparently the December data came out from the NHS this morning and 20,000 people, you see that right there, less than 20,000 people opted out from sharing their data with the NHS and the federated data platform. Now, the reason this is incredibly important is because if there's no data for the federated data platform, well, the platform can't be federated via the data if there is no data. So people have to opt in to give their data for Palantir to even have any use cases of it. That's why when people say, oh, Palantir's stealing the data, it's like, dude, the platform's not even reasonably like meaningful without the data. So like they're not trying to monetize the data. They just need the data to make it make sense. 20,000 people opted out. There were a lot of fears by people like Corey Kreider and the Foxglove groups and all these people that were protesting at the London HQ last week when ironically Palantir employees have been off since December 18th to January 2nd. So like, I mean, like you weren't even protesting in front of the employees, that there would be so many people that opt out that the NHS would have awarded a $500 million contract to a company that doesn't even have the data to be able to integrate into the NHS. And the quality of the NHS would significantly decrease if that many people opted out, because at that point, if there's no data to be utilized, then it was just going to be bad. Well, they haven't opted out. Only 20 people actually, or 20,000 people said that they were going to opt out. The vast majority of them couldn't. Mikkel in the chat says, myth, the only thing they're opting out for is the data to be used for research. They can't opt out of the actual platform. Yes, that is another key thing to take into account. What the NHS introduced when they established this contract is that you won't be able to actually opt out of the contract. But the research in regards to data being used is a critical component of the FDP. One of the key, theses and moats around Palantir is their network effects, and those network effects are contingent upon more data being used so that they can do R&D, which essentially subsidizes the cost of building a lot of these tech platforms that are, better than everyone else in order to be utilized. So, the idea that 20,000 people opted out of research in a world in which the NHS serves, 70 million people is just laughable. If you saw on that chart, let me just share it one more time. More people, to the tune of about 3 million, opted out in June of 2021 when the GDPR regulations came out. These were more extensive regulations from the NHS that required like really, just intrusive amounts of data to be able to do what they wanted to do. And I guess they just didn't really educate the public enough at that time. And a lot of people opted out. They just didn't want the NHS to have all that data. For Palantir, I think there's two things. I think some people either just didn't care about Palantir having their data. Because they were like, we I don't know the back end operating system for my healthcare. I really don't. Like when I go to get a checkup and stuff, and the doctor's like pulling up they could be using Excel spreadsheets for all I know. Like I don't know, and I quite frankly don't care as long as it works. So I think that was one thing. And then number two, I think a lot of people, giving some credit to the UK citizens. I think they're just smart. A lot of them aren't I wouldn't say they're ignorant. I would say some of them, the UK has an extensive tabloid media presence, so a lot of them can be manipulated easily, but I don't think they're stupid. And I think if a company's promising you lower wait times and less backlogs, and you've got a mom that's older and she's like waiting months to just get basic treatment, you're going to just take a risk and be like, all right, fuck it, let's see what happens. Right. And so I think from that perspective, we had a really good job from Palantir being able to secure a lot of this data in the context of the NHS. Now, let's quickly talk about their stock price as well. We got a lot of other stuff to talk about 8 minutes until the market opens, but I want to specifically just look at Palantir price action. Obviously, market has been red today, and Palantir in particular, down 3.58% of the day. This is the first day we've had a really a really down day. I mean, we haven't seen sub 16 since November 2nd, and we absolutely have not seen the sort of 4% days in a while. I mean, from 18 to 17, we had some 4% days. That was pretty rough, but this is when we're seeing some actual dips. I would not be surprised if our good friend Kathy Wood decides that she's going to buy some shares today. I mean, look, her highest conviction plays are down pretty dramatically on the day. Palantir is becoming one of those names that she's more bullish on, seeing it down 3%. Maybe she ends up buying the dip. Now, why are we seeing this dip? A lot of it is macro driven. And one of the reasons it's macro driven is, quite frankly, there's a lot of stuff we'll talk about the macro, but the 10 years inching higher. I think a lot of people are starting to take some profits. We'll look at a bunch of analysis over why 2024 might be a little rocky, at least to start off for the first couple months. Nothing fundamental to me has changed about the economy. We don't have any other inflation data. There's not unemployment going through the roof, which means this is one of the most healthiest pullbacks, quite frankly, that I think we've all seen in a while, and it was needed. We needed a pullback. We needed a healthy pullback. It made sense. Now we've got a pullback that is happening. And now the question is just, is it going to extend in terms of this pullback to be, longer, or is this pullback going to stop here and this dip is going to get bought up? So we will see when it kind of happens. Arnie says, in my opinion, Kathy is selling. She doesn't like to buy when it drops. Well, that's true. I mean, the one time she did buy massively was when it dropped on the JP Morgan report, 10%. She bought like a couple million shares or 1.2 million shares that day. She did buy a little bit in the low 17s. But yeah, in general, she is very interesting in terms of how she buys and sells. HIMS. Okay, let's talk about HIMS. We got 7 minutes until the market opens. Let me address this. I have a friend who has a crap ton of leaps in HIMS, and he texted me today, and he said he's selling the shit out of those leaps. He was like, because HIMS is weird, dude. I don't know. Is this still green? Yeah, why is HIMS up 8% of the day? Dude, this is a company where I don't know if they have a moat, okay? And I'm not in this company. I'm not super excited about this company, but they're an e-com men's and women's health brand, and their moat to me is marketing. I don't really know if they are, some substantial player when it comes to the healthcare space in regards to their technology, and they don't really have that much technology, but their growth is phenomenal. Do I keep saying market open? Do I keep saying market open soon? I'm sorry. I got to get used to it. Market close. We got market close in 6 minutes, not market open. Dude, if the market opens again, I'm not going to be happy because this was not the most fun market open today. There was a lot of red. We got Robinhood down 12%, S&P down about 1%. But anyway, HIMS is green today, up 8% on the day. HIMS to me does not have a huge moat outside of the fact that they're growing revenues 83% year over year. I know they have this teledoctor subscription, telemedicine subscription part of their business. Look, it's a really cool business, interesting business. One could argue it's undervalued at $2 billion market cap, something like that. The problem is I just never got super interested. Yeah, $2.05 billion market cap. Now, it's up 8%. If you own this stock, you might want to think about taking some profits. Because again, my friend, his January 2026 leaps were up 60%. It's not easy to get January 2026 that far out of the money leaps to be up 60% because you've got so much time decay, right? You got so many years until it actually expires that for that to be up 60% is quite interesting. So I do think that this might be something that's sold off because you can't have an entire market that's red and then you got HIMS up 8% of the day with no real news. And if there is news, let me know in the chat. Maybe I'm missing something, but it just decided to go higher. In fact, let's just look it up real quick. HIMS stock. Let's just see. Is there any core news today? Yeah, there's nothing. There's literally think pieces on, can HIMS grow, blah, 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 blah. The last month they launched a weight loss program that doesn't include Ozempic. Yeah, there's nothing fundamental. I mean, it seems very technical driven. And if that's the case, maybe there are some profits to be taken away here. Mikkel says, no way HIMS is getting profitability this year, not selling anything. Look, I'm not saying that they're not going to be profitable. I'm just saying, I don't know if this is a company that is the biggest moat. And remember, you guys got to remember, profitability is not the end all be all. I think Palantir made us think when a company gets profitable, it's just going to moon. Palantir got profitability at all-time lows. It had no choice but to go up. It just had to go up, right? Now, I don't know if HIMS is at all-time lows per se. It's already gone up a lot. So same thing with SoFi. If SoFi is $12 and then they become profitable, there's not a jump. If SoFi is $8 and they become profitable, there would be a jump. Now SoFi is kind of teetering around that $9.50 range. So it'll be interesting to see what happens. But I do think long-term HIMS could be nice for their growth if they keep up that 80% year-over-year growth, which is hard to keep up. But in general, I just don't see the moat of the company. I really don't, outside of it being quote-unquote undervalued. And if someone does have a substantial moat, please tell me, because every time I've seen people talk about HIMS, it's just the growth. The growth. The growth is great, but why won't the growth stop? That's my broader question when it comes to HIMS. Celsius also had a huge jump. We got 3 minutes into the market open. 3 minutes into the market close. Guys, I also said a word today. Dude, I said a word today that you guys would have loved. I haven't posted it on Twitter yet. It's a little clip. But I was trying to say the word simultaneously. And I was also trying to say the word constantly because I was saying something. And I said constantaneously. I said constantaneously. And the more I say it to myself, I kind of think, I think it's a hell of a word. We forgot to do word of the day in the market open today. So we'll do it. We'll do it on the close today. Celsius up 8%. We'll talk about Celsius in a bit. I don't know why Celsius is up either. I have no idea. There's no fundamental news, but Celsius is up. HIMS is up as well. But constantaneously, I think this word has potential. Okay, I really think this word has potential because it wasn't a word that I tried to come up with. It was a word that came in the heat of the moment as you were trying to say two other words, and they merged together and they turned into this word that's called constantaneously. And it actually rolls off the tongue. It kind of sounds like, all right, let's just imagine I'm saying something. So, I think Palantir has these constantaneous updates. See what I'm saying? It actually rolls off the tongue. It makes sense. So I think, we'll make it a feature word on the market open, on the market close. Goodness gracious. And we'll make it a thing. All right. We got the close in 2 minutes. What am I looking out for? First of all, what's the agenda? After the market closes, we're going to be talking about Apple. Lost $120 billion in market cap today. We're going to be talking about Dan Niles of Satori Fund, what he is long and short. He has 2 picks that I think are going to be pretty surprising for a lot of you going into 2024. We're going to talk about Tesla deliveries versus Rivian. Dan Ives on CNBC. We're going to hear his opinion about what it means for Tesla deliveries. And then we're going to talk about the Bitcoin miners right after we get into the market close, because the BTC miners have not really had a good day. And, everyone thought yesterday they were going to have a great day because Bitcoin passed 45,000, and Bitcoin's still doing a great job. 44,830, still up about 4.3% from last night. But the miners just didn't follow as people thought. And I guess that's the story of the market, right? You think one thing's going to happen and then it just doesn't happen. The miners decided to just go the opposite direction. They were up a little bit. I mean, they were up actually a lot, 12, 13% in the morning. And then, within an hour, they all sold off. So we're going to be talking about that and discussing kind of what that means in terms of the implication for Bitcoin. And we'll also get a spot ETF update. If this ETF doesn't happen, Bitcoin is screwed. Or maybe if it does happen, Bitcoin is still screwed because of the sells of the news, or it has a God candle when it happens. There's so much to kind of break down. So we'll be talking about that as well as we get into the market close. All right, here we go. The 360 people that are here. You are here today witnessing history. This is the first market close on this channel, January 2nd, 2024. Ladies and gentlemen, the market is now closed. I don't know what to say because I usually say wake your asses up. So how do we close your asses down? How do we, so someone's got to help me with this. Put it in the chat. What do you think should be the catchphrase after the market closes? It's got to be something with asses. It's just got to, I mean, no, I like boobs, but we got to do something with asses here to see what we can do. All right, let's see what we got with the market close. Palantir, 1659 on the day, down 3.4%. Apple, 185.64, down 3.5%. Apple just got cooked, and it's not because the CEO's name is Tim Cook. I mean, it got demolished today, so we're going to talk a little bit more about that. Enphase, 131, slightly down, nothing too crazy. Actually, kind of just 0.68 down percent for the day, not too bad. SLG, 45.92. Moderna is a winner today. KRE regional banks are a winner today. TFC also had a great day. Did it get sold off by the end of the day? Oh, look at that. 1.6% of the day, TFC. I did buy a little bit more TFC today. My options position is just very low in terms of the average cost. So even if I'm buying higher, I'm barely increasing my cost just because I loaded up on the lows in November. So TFC options doing very well. Those are 2026. So really I get to sleep like a baby at night with TFC. Even if TFC goes back down to $30, you get a lot of time for that thing to start recovering. And again, quick thesis on regional banks: interest rates come down, tangible book value comes up because AOIC losses come off their books. These stocks are just, they're going to go higher. That's just the nature of how it works, as long as the businesses are intact. And so far, what it seems like is that most of the regional banks are intact. They're not at risk of a bank run. We're going to get bank earnings next week, or in the next 2 weeks, and TFC is going to be January 18th, so we'll be covering that as well. Snapchat up a little bit in the after hours, but down 4.6% on the day. Amazon's down 1%. Nvidia's down 0.01%. Meta is down 2%. Robinhood got smacked down 12.37. They are down. They are down to what? They are down 2.9% on the day, so they got down as well. What else do we have? S&P ended the day down 0.57%. All right, so let's talk about the miners. Now we got to talk miners, and kind of I'll try to explain what the hell happened today with these miners, because they got wrecked, and they got wrecked by it. So you're looking at Marathon right now. They're down 2.38%. Okay, let's look at CleanSpark. This is the one I've got some stock in. CleanSpark down $10.87, down 1.36% on the day. We've got Riot. This one is also down about 0.39% of the day. This one recovered a little bit, but it was down a little bit more. And then you look at Coinbase. This was really interesting to look at. Coinbase took a beating. Okay, Coinbase took a beat. It was at 178 in the morning. You know, it dipped down to like 174. We're like, oh, it's a little sell. No, it took a beating. 156, down 9.8%. So it fell. The miners actually fell relatively less compared to what Coinbase fell. But then you look at MicroStrategy. Okay, you look at MicroStrategy. MicroStrategy is up 8%. Coinbase is down 8%. MicroStrategy is up 8%. Why is this the case? In my opinion, is that MicroStrategy is actually sitting on $3 billion of unrealized profits on Bitcoin, and that is valuable to the market in case they ever had to liquidate. But Coinbase has run up almost 400%, and Coinbase at the end of the day is an exchange. It's not sitting on billions of dollars of profit, theoretical profit. It still has to produce a profit via transaction revenues, and maybe those transaction revenues have peaked if Bitcoin really is not going to get an ETF approval that spikes it up higher, or if it peaks at this $45,000 range, or even 46, 47,000. We're looking for 60, 70 grand for Coinbase to really explode. So from that perspective, the Bitcoin stocks just didn't do as well as I think a lot of people thought they would do today. Jesse, our good friend on Twitter, has bought the dip. Really interesting strategy he's planning to do. He has purchased over $400,000 of Bitcoin miners in the past couple of weeks. Today alone, he bought in about $100,000 of Bitcoin miners. Let me just share this right here. So you've obviously got one section of the population that is incredibly just bullish on these Bitcoin miners. And he says, if they fall down another 25-30%, he wants to buy even more of these bad boys. About 400,000 towards Bitcoin miners since Thursday. That's Bitfarms, that's Riot, that's CleanSpark, that's Hut, that's your Marathon, that's all those Cypher, those guys. They are getting some capital from Jesse. And look, Jesse's not alone at the end of the day. A lot of people feel that this is the play. If Bitcoin gets that $50,000, $70,000 range, these miners are going to 2-3x. These miners have already 4 or 5x, and there's no stopping them as Bitcoin gets higher. Why did they not perform today? Honestly, I think, quite frankly, what I really think why the miners did not perform today, and then we're going to listen to Dan Niles of Satori Fund. I think the miners needed a break, just like everything in the market needed a break. I think this was one of those days where you kind of just like, you kind of have to look back and realize like we are up 24%. The NASDAQ is up 54% as of last year. And at some level, there's got to be something healthier than just continuing to run up and up and up higher. I mean, even the dip around Palantir at 1650, incredibly healthy, just given the run Palantir has had. And the other reason for this is because I don't think we want a 2021 type of market. I really don't think we want a 2021 type of market where everything just goes up, or sorry, 2020, where everything just keeps going up and up and up and up. And like NEO goes from $3 to $60. Like that's not sustainable. And here is where I think the speculation has started to decrease a lot more. We don't see NFTs that are worth, $50 million anymore. There is some speculation happening. Obviously the altcoins have gone higher and higher and higher, but the speculation we saw back in 2020, 2021 is rather low in 2024. And it was low in 2023. I think that's good for the markets because at the end of the day, the goal is at the end of the year, can we get a market that's up another 20% or up another 15%? And for that to happen, we need to make sure speculation is low and we need to make sure there are healthy pullbacks to get the money that is waiting on the sideline to get excited to come back in. And the only way they're going to get excited to come back in really is if there is an opportunity for them to feel that they can get into the markets. NASDAQ close to a 300-point drop on the day. That is correct. NASDAQ is down. Amit, are you going to go live with TJ on options? Yes, that will be a live podcast, and that'll be at 6 p.m. Eastern. We will be doing that. Mark added Clean Spark, Marathon, Hut, Wolf, and Coin. Yeah, I mean, a lot of people bought the dip on these crypto companies, and maybe today was a great day to buy the dip. These bad boys were down. They were down, but maybe we have a little bit more of some red days to come before they are officially down. Let's take a look at Dan Niles and see what he had to say from Satori Fund. He had a really interesting perspective on what he is long and what he is short this year. So let me just share that real quick and let's get his thoughts on the two big names out of the big seven that he's excited for. And then we'll get some more thoughts on Bitcoin and interest rates going into 2024.
Are connected to the performance of the Magnificent Seven stocks as we get ready for the first opening bell of 2024. We're seeing a little bit of profit taking in those big tech stocks. Let's talk about some top tech picks with Dan Niles, founder and portfolio manager at the Satori Fund. Dan, it's good to see you. Talk about your approach to this year because, we obviously have a lot of calls that the Magnificent Seven probably were overrepresented in terms of leadership last year. Some of that's started to change in the last 2 years. How are you setting your game plan for 2024?
Yeah, so the way we're approaching this next year is we've got a combination of offense and defense. And on the offense side, we've got two of the Magnificent Seven as top picks for 2024. And those two picks are Amazon, which tends to gain share during a recession. But we also think it's got a lot of profit margin expansion potential going into 2024 based on all the capacity they built during COVID. And the second one we think is Meta. That was actually a top pick of ours for this past year, and it was the second performing name in the S&P 500. But if you look at it, the revenue growth was 15%, but you can get it at just a 25 multiple. You compare it against a name like Apple, for example, which got downgraded today by another firm, and Apple had negative 1% growth this past year, and you can buy that at 30 times.
So he's long Amazon. That was the interesting thing I wanted to discuss. He's long Amazon and long Meta. The reason for Amazon is that margins are going to increase, which means free cash flow is going to go out the wazoo. And as that free cash flow increases, shareholders are obviously going to see that there is a lot more potential for them to expand the retail business, not to mention their advertising business is going to be very good. And then in the context of Meta, they are growing at 15% per year versus Apple growing at negative 1%. Meta is trading at a 25 PE. Apple's at a 31 PE. So I think that trade is obvious. What he also said that I thought was really interesting is that the political advertising that's going to happen going into 2024 is going to be off the chain. I mean, it's going to be incredible, right? There is going to be every single candidate in the Republican primaries. Democrats, they picked Joe Biden, right? But so they don't really have a primary, but there's going to be a lot of Republican candidates going after it. And then once you've got either Trump Biden or Nikki Haley Biden, whatever it's going to be, that is going to be one of the most explosive elections of our lifetime. I mean, that's going to be a very, very big election. And there's going to be a lot of ad dollars allocated. So from that perspective, Meta and Google seem to benefit the most from that. Amazon's not really going to get election ad dollars, and you know, their ads are a little bit different. You got Prime, obviously, that'll get some of that TV ad revenue, but really it's going to be Meta and Google. And so it makes sense from that perspective to go long Meta, long Amazon versus long Apple. Now, you know, as he says this, what I wanted to bring up is the story of the day. Barclays downgraded Apple. Okay. And Barclays downgraded Apple for a particular reason. One of the main things they highlighted, there was a couple of things they highlighted, but the core thing was that they are saying there are weaker iPhone 16 sales, which Dan Ives fully disagrees with. We'll see him talk in a second, but his argument is that in Asia, the people that he's been talking to and the employees of Wedbush that are, you know, do tech research, they think that Apple iPhone 15 has been an upgrade cycle, so that Apple iPhone 15 sales are actually not in a bad situation. And they also believe that this is a warning sign for iPhone 16. It is kind of crazy to me to think that Apple has to release another iPhone in the next like 9 months. And it'd be like, I don't know how I would rationalize buying another iPhone after I just got this iPhone 15. I mean, like, I'm going to keep this for years, right? So it is a little worrisome to think that the iPhone is kind of the core investing thesis for a lot of these banks that have these high price targets on them. They put their underweight price target to $160. Right now, Apple went from $194 to about $185 on the day. So Apple fell about 4%, lost about $120 billion in market cap, really off of this argument that iPhone 15 sales are not going to be good. And as a result of that, it's going to be a tough way to imagine Apple continuing to do well. Now, Ryan says, how do you rationalize Apple at a 30 PE anyway, especially when they are growing in negative? I mean, look, this is a hell of a question. How do you rationalize a company that you're paying 30 times price to earnings that is not growing? The only way you can rationalize it is if you believe there is a substantial chance for them to increase earnings per share, which means the lack of growth can be made up for by earnings per share. And Apple does that by just buying back stock. Or you think there's going to be an acceleration of growth. There's two elements of acceleration of growth for Apple. Number one is that Vision Pro, which I am still bearish on. Look, I'm probably going to be wrong on this, and Vision Pro is probably going to be great, and they're going to sell a lot of it. I don't think people are going to wear, as Dan Niles says in that video a little bit later, the ski goggles that Apple has produced. Like, I don't think people are going to wear those every day. And if they do wear those every day, it's not enough to get them to keep using it so much that they're going to upgrade to the next one, and then they're going to download all these apps. I'm bearish on it. I don't think it's going to work. I'm probably wrong because it's Apple. They're probably going to sell a shit ton of these. I bought 2 Apple products over the break. I bought an iPad Pro. I bought a MacBook Pro. So, you know, I'm sure people will buy this Vision Pro, but I just don't see that vision. I don't see the vision of the Vision Pro. So it's very hard for me to rationalize that investment. The other argument is their services, which are growing at 20% year over year. But at the end of the day, how many more Apple Music subscriptions can they keep selling to? You know what I mean? Like, how much can they really monetize that existing user base? The bulls say there's a lot of monetization left. The bears say, well, you know, everyone's had an iPhone for a long time. It's a little bit hard to do that. So that is how you rationalize the 30 PE. The market's obviously rationalized it. The question is does it make sense to rationalize it at that level? So that is the story with Apple right now. Dan Niles also makes another interesting last point on Meta. Their Ray-Ban glasses are a real thing. I don't know if you guys have seen those Ray-Ban glasses. Inbound, is this a market close stream? Yes, sir. Market close stream, first one of January 2024. Those Ray-Ban glasses, I thought it was like a little silly partnership they made a couple years ago. Apparently, it's gotten very advanced. And I've actually seen Instagram stories from friends that are posting stories via those Ray-Ban glasses. So literally, they wear the glasses, they're walking around, and they just tap it. And then it records anything you would do with your regular phone, and it posts it immediately to Instagram. It's an incredibly new, interesting interface for communication. It is probably the more consumable version of the Vision Pro, even if it's not as technologically advanced, because at the end of the day, they're just glasses. But there's also potential in those Ray-Ban glasses, Dan Niles thinks, to increase Meta at some level this year versus the Vision Pro to have this massive level of growth as well. So that is something that's really good for Instagram. Now, Snapchat tried to do that. They had some Snapchat glasses. Those never really took off. No one really wears them, but the Ray-Ban Meta glasses collaboration is working to an extent. Ashwin, hello from Germany. Ashwin, thank you for being here today. So that's what Dan Niles had to say on the two stocks he is bullish on versus Apple that he is not bullish on. Let's get a look at Dan Ives. He was on CNBC as well today, and he talked about Tesla deliveries. For those that didn't get the news about Tesla deliveries came in, expectations 480,000. The street expected. Tesla did 484,000 delivered. They produced 494,000 vehicles. They have delivered overall in 2023 1.8 something million vehicles, which was Elon's promise at the end of the day. And Tesla was able to execute against that. So very exciting news for Tesla. Stock was still down today based on the macro. But here's what Dan Ives had to say about Rivian versus Tesla and their capitalization on EV demand. By the way, earnings January 24th was announced today. So we'll be covering those earnings a little bit later this month.
Next guest, he was right about the big rally. Dan Ives, Wedbush Securities Analyst. I would guess by the end of this year, you'll be atop the leaderboard of CNBC appearances, Dan. Although I'm willing to take an over/under on that. And you know what? I'm going to love every one of them. So happy New Year.
And it's great to be
good
here.
to see you. You had a good call on tech overall. You continue to be quite bullish. Let's start with Tesla, though. Just give me your take on those numbers. You know, Phil just mentioned 2.3 million. Are you going to be towards the high end in terms of what you expect them to deliver this year?
Yeah, I think whisper expectations could be higher. Look, this was a strong result. You look what's happening in China. There were fears there, and it was actually a source of strength. We think a record quarter in China. So I do think this is an important, sign that demand's actually strengthening for Tesla. It continues to be maybe EV demand soften, but not Tesla demand. And that's the important thing going into 24.
Yeah. Where is that line? Why is that the case then? And in particular in China, where BYD is such a strong competitor, are they going to be able to maintain their market share?
Yeah, BYD has done a phenomenal job, but I do think if you look in the driver's seat, it's Tesla and BYD gained some net share from NIO and others. And in China, especially if you look at the last few quarters, there were fears that this price war was going to continue. It actually hasn't. See, now, to Phil's point, you're seeing price stabilization. That's very important because now the Goldilocks scenario, margins upticking, demand upticking. That's where, in our opinion, you see $1 trillion market cap for Tesla over the next year, despite many of the haters continuing to hate.
Dan, I have to get your take on Apple this morning with Barclays revealing its downgrade over cooling iPhone demand. Do you agree with the assessment there? Your channel checks showing the same thing about the demand picture for iPhones?
I mean, the last 48 hours, it hasn't changed from what we've seen over the last month. I mean, look, and I get some of these calls from a valuation perspective, and many that have been naysayers over the last year. But if I look at iPhone 15, we have not seen number cuts from our checks in Asia. And that's important because I think it shows that this upgrade opportunity is actually manifesting for Apple. I actually think the mix is much more Pro, specifically Pro Max in China. I think what that ultimately means is that this is going to be an iPhone number that comes in above expectations. But the most important thing, and David's talked about a lot, services. I still think this is going to be teenager type of growth, not single digits. If that's true, and we believe it is based on our checks, I think this is ultimately a stock that could go 30-40% higher this year.
Wow, right.
Okay, couple things that he said there that I think was really important. First, on Tesla, BYD deliveries were out today as well. So Tesla delivered 494,000 EVs, or they produced 494. They delivered 484. BYD did 526,000 in Q4, mostly in China. So that was one thing that the market was concerned about today, which is like, hold on, why is BYD doing another 30, 40,000 vehicles over Tesla? Now, obviously, Tesla's doing it worldwide. BYD is doing it in China. They're different here. But it was something to think, like, BYD is not slowing down. I mean, people are buying those BYD cars, even if they're not buying, a Tesla. It's just that most of that growth is concentrated in China. The question becomes, can BYD expand to the Netherlands? Can they expand to Spain? Can they expand to India? Can they expand to all the different markets, South Korea, Australia, where Tesla operates? And that's where you have a broader question about the Chinese government allowing them to do that. You have a broader question about, do people even like those cars? It's easy to sell Chinese food to Chinese people. It's harder to sell Chinese food to other races if they don't really like Chinese food. So you got to ask yourself a question: are these Chinese cars going to be able to easily be sold across the entire world? Whereas the universal brand that is Tesla has proven itself to be a universal brand for a reason, and not just a local regional thing that people are excited for as well. Jay Schwartz says, yes, they can expand and will. I think as we're going to see, that'll be the battle of 2024 in comparison to Rivian, that's down 10% of the day because Rivian missed their deliveries by 10%. So Tesla knocked their deliveries out of the park. BYD knocked their deliveries out of the park, mainly in China. Rivian came in down 10%. It shows you that EV demand is there. That is the full kind of conclusion that I've come to. EV demand is there. It's not like EV demand is an issue, especially in the United States with all the subsidies and the rebates we have. People want to buy EVs. The question becomes, which company is actually going to be able to capitalize on that? And the fact that Rivian was not able to meet their delivery estimates, to me, means that people just picked Tesla over Rivian's. And there's a host of reasons why they did that. That doesn't mean Rivian's going out of business or anything like that. That just means that, you know, Tesla was able to capitalize on the demand. And a few quarters ago, Tesla was actually not doing that well when it came to deliveries and production. And there was a question on, is there actually a demand problem? It doesn't seem like that demand problem is necessarily there. Imnop says, I like Chinese food, but I don't want a Chinese car. Yeah, and I feel like, look, a lot of people think like that as well. So, you know, when it comes down to a Tesla versus a BYD, if you're going to shell out that much money, like they're going to be shelling out 100K. I feel like most people would want to get a Tesla just intuitively. Obviously, if you're in China, you might feel a little bit differently as well. So I think there's a different element to this. Jay Schwa says, what if every cuisine you ever made was prepared and cooked in a Chinese kitchen? That's your iPhone. Yeah, but the iPhone is not a Chinese brand. You got to remember that. Like the being made in China, there's Teslas that are made in China but sold in Australia. There's a brand associated with Tesla that is fundamentally different than a brand associated with a BYD or a NIO. Right. So to me, the iPhone brand is something more universal, even if it's made in China. And that iPhone brand, it transcends what a lot of consumers think of. Like when you think of an iPhone, you think of just pure elegance and beauty. And all the Android people are probably hating that I'm saying this right now. But, you know, there is a certain brand affinity that Apple has. And I think Tesla has as well. And I think the delivery numbers today proved that Tesla's brand affinity is not going away anywhere right now. AJ says no one is buying a BYD when Tesla has the potential for self-driving. I mean, that's the other thing. We have barely talked about their FSD capabilities because, you know, it just hasn't been in the news that much. But when that really launches, that's where I think there's going to be a core differentiator between Tesla and a lot of the other EV manufacturing or EV companies that exist as well. Blake says, is the market close going to become a regular? That is correct, sir. Every day, 3:45 to 4:45. I can't even believe it's 4:20 already. Like, I where did the time go? I have no idea. But every day, this 3:45 to 4:45 hour, keep it open because we've got a market close. All right, let's get a bearish view on Bitcoin. Bitcoin has held high at 44.8 today, but we've got some people that are just not buying this rally to continue. Let's hear what they have to say.
So what about now?
Well, this one I trimmed also on Friday, you know, a day too early. Look, I don't believe in Bitcoin. I still see no use case, no end market for it. It's just a speculative market, but that's fine. I'm just not a believer. If I were a believer in Bitcoin, I wouldn't have shaved it. So I basically cut it almost in half. And the reason I did was I think the news is priced in. So you get the approval for the ETF, and then maybe you sell in the news, because I'm not the only one that bought it in expectation of ETF approval. And that's been the move from 28,000, which is roughly where I bought. I bought it almost all of it under 30 to where it is now. Now, the other issue that I had with it is that what if it doesn't get approved?
Well, I was thinking that. What if it doesn't?
What if it doesn't get approved?
Surprise,
and then it's toast for a while. So it'll recover because they're just true believers driving. And the third thing is, you don't need an ETF. An ETF is great for multiple positions, but you can buy this, you know, Bitcoin. Now there'll be a crypto ETF, but as far as Bitcoin goes, it's very easy to buy. You can buy it with no commissions on Fidelity. You can buy it in Robinhood. You can buy it everywhere. So I don't know what an ETF does for Bitcoin itself.
Now, doesn't it theoretically open it up?
This is interesting. What they're going to talk about is the historical thing that happened back in 2017 when Bitcoin futures were introduced as well. But the one thing I think that he's getting a little wrong here is that these BlackRocks, all these guys, they haven't bought the Bitcoin yet. That is what everyone is hoping. Everyone's hoping when the ETF is approved, it opens the floodgates for these major institutions to buy the Bitcoin itself. Now, he does have a point here, which is that the ETF can be manipulated in a lot of different ways, and that potentially could be really bad for Bitcoin, just in regards to shorting and all these different things. And so they'll talk about that, but there are kind of two sides to this story for Bitcoin.
It does. It does. Because people are so used to buying ETFs at this point. There'll be more demand for it, without a doubt. But my point is that I just thought it was prudent for a non-believer to take a lot off the table and book the game.
To your point, the last big approval, quote unquote, that everyone was waiting for was futures. Yeah. And that ended up being a negative catalyst. That actually was the top. In 2017, December of 2017, in Chicago, they started trading futures on Bitcoin. A lot of people in the lead up were saying, oh, this is so bullish. Actually, that enabled a new level of price discovery. They shorted it to hell, and it collapsed to 11,000. So just because we have this catalyst in front of us doesn't guarantee, all of a sudden there's going to be this buying bonanza and there won't be sellers. There'll be plenty of people utilizing the ETFs to express bearish bets. I think those will be overwhelmed in the opening weeks. Yep. But I agree, a lot of this is priced in. And by the way, this ain't even going to be that great of a business.
No.
BlackRock and Fidelity will carve it up. It'll probably be 25 basis point business inside of 18 months. This is not going to be 1% ETF internal expense ratios as far as the eye can see. And there aren't going to be 10 winners. And the only evidence I have of that is 30 years of publicly traded ETFs. There are not 10 SPYs. There are not 10 oil ETFs. There are not 50 different versions of the gold ETF.
They're not 10
It's
Joe
one or
T's.
two.
But just in terms of full disclosure, I may sell the rest of it before that January 10 deadline. I just don't know. I'm still thinking.
One of the reasons.
So this is interesting, right? I didn't even know that apparently the futures potential to trade Bitcoin futures came out in 2017, and that actually allowed a little bit more market manipulation when it came to, the nature of how Bitcoin was going to be eaten by the piranhas that are the hedge funds and the traders that want to have their way with it. So, look, dude, if I said I knew what would happen with this ETF, I would be lying to you. I have no idea what to think. There's a big part of me that's like, well, this ETF is obviously good for Bitcoin and it's not priced in, and there's all this, momentum that's going to be chasing it when it comes through. And then there's a part of me that's like, well, maybe it's just going to be an NHS thing for Palantir, where we got the deal. Palantir had already run up. We were at like $19 when we got the deal, and then we just sold off because it was like, all right, well, we got the deal, and now we have to go actually, perform the service for the deal. And I don't know. I have no idea what's going to happen. It's going to be super exciting, which is why, I have some portion allocated to this play, and we'll see what happens from there. But like literally, I don't think any of us have a real idea of what's going to happen. In terms of the actual ETF approval, BlackRock is saying that the SEC should give them an answer by the end of this week, which is going to be, really good if we get an answer by the end of this week. If we don't get an answer by the end of this week, I think a lot of people are going to be wondering what's going on. We're going to get an answer within the next 2 weeks, no matter what. It's going to happen. I mean, they're going to let us know what's going on. If it doesn't happen, then I think it's going to be very, very tough for people to stomach it. Now, granted, because like if it doesn't happen, I think all we have is downside. If it does happen, we still have downside from a sell the news event, but there's more upside, obviously. But if it doesn't happen, I don't know I don't know how Bitcoin goes up that day. I don't know who decides, let me buy Bitcoin, because, all the ETFs that were going to load hundreds of billions of dollars into this thing, yeah, that's just gone. I don't know. I don't know if that's going to be the case. So we will see what ends up happening, but it will be exciting to see where it goes from there. Did you watch the Wolf of Wall Street interview on Tucker Carlson? He said the market is manipulated. Yeah, I saw a little bit of that. I mean, Wolf of Wall Street, the guy who played Jordan Belfort, or I think his name is Jordan Belfort. He was talking about market manipulation and what the market makers do. I mean, we all know the market's manipulated, right? Like the way you beat market manipulation is you buy and you hold for a long time, and over a long time you are able to, beat it. Or you have an understanding of a certain asset that the market doesn't understand as well as you do, and you buy it before the market understands it. Like everyone who understood Coinbase at $30 has done very well, especially if you had options, because then you've done really well. And the market didn't get it at the time. So I think, as much as the market's manipulated, if you actually do good DD and research and you find undervalued companies, then there is a way to absolutely beat the market. Or you just buy and hold for a long time, because over the long run, the market tends to go up a little bit more. If the ETF is not approved, I am buying 5 figures as long as it does crash, of course. That's the other thing. That's actually a good point, Jay Schwash. If the ETF is not approved, obviously there are going to be people that have been waiting to buy the dip. I mean, people would, if you're bullish on Bitcoin, you want it at 27,000 versus 45,000 because you believe that long term it's going to be, $1 million a coin. So, why not, right? Like at that level, there's probably going to be a lot of a floor waiting to buy up those dips, a lot of limit orders in place. The question is just if we get there. Jay Schwass says, I loaded coin at 30. Wow. Well, you beat the market. You beat the market on that one. Michael Johnson says, music in motion. For listeners, can you try to explain the halving event that happens with Bitcoin every 4 years? Okay, so I will try my best on this. I am still learning this and trying to make it make more sense to me as well. From my understanding, the halving event is built into the Bitcoin technology, is this process that cuts the amount that can be mined in half every 4 years. And when that happens, that means that the supply of Bitcoin that is available to be mined decreases in terms of its time to actually enter into the market. So I don't know how many more Bitcoin there are left to be mined. I think it's maybe like 1 million or 2 million. I could be totally getting that wrong number, but let's say there's 1 million Bitcoin left to be mined. And right now, I think the mining rate is like 6 per hour. I'm probably getting that number wrong as well. That number would become 3 per hour, and it would essentially go in half. And so every 4 years, as we've seen that Bitcoin halving event happen, we've seen the demand try to chase a more limited supply because that supply is being mined in a more limited rate. There's actually a really good chart that shows what happens from a price action perspective that Jesse tweeted out. Let me see if I can find it, because that chart is the real chart that I think does a good job, at least explaining from a price action perspective what ultimately happens. If you look at what happens every time the halving event occurs, Bitcoin goes up, and it goes up a lot. And what people are looking at is that $80,000 range for Bitcoin to kind of go from a technical perspective. If you get another halving event, given every time we have had a halving event in history, Bitcoin has tended to go a lot higher when that halving event has happened. Let me see if I can pull it up. If I can pull it up, I will show you guys. But that is what it happens in a nutshell. There is just more demand chasing less supply, and that less supply is going to be more beneficial with Bitcoin. Dude, I call it halving because it looks like halving. I know it's I think you guys say halving, but I call it halving because it looks like halving. So every time I say halving. Let me see if I can just search it right here. So Bitcoin halving. Let's see if this comes up. Oh, here it is. Perfect. I think I found it. Oh, I found it. Wow, that's great. I actually found it. Here we go. So this is the chart, okay? This is the chart. So this is the halving event. The first halving, as you can see, was here. And we saw Bitcoin go up from, where were we at? We were at, this was back in 2012. We mooned up to $1,200. Okay, I think it was at like $300 or something. Okay, then it came all the way back down. You see this red line? Then we have the second halving event. You see this black 2 right here. And it came all the way up. And then it came right back down, right? Then we have the third halving event. And you see this green arrow? Then it came all the way back up. And so what's estimated here is this fourth halving, we are likely going to see, again, that Bitcoin run the same way it has happened for the past 4 halvings. Now, look at the price target right there. You got 180,000. Sorry, I said 80,000. It's 180,000. That is the estimated price target if it follows the sequential pattern that it has followed for the past 3 halvings. And that's why people are really excited for this halving event. Because if it does happen, and it's just math at the end of the day, that there is a less amount of supply and more demand that is chasing that supply, and literally a less amount of supply that is being mined because the technology itself is built to give half of the supply that it was giving every 4 years, then there's going to be all these institutional investors, when you talk about the institutions that have these ETFs approved, that are going to be chasing an asset that is declining in terms of its supply. And that's what gets people really excited when it comes to Bitcoin and the halving event. Now, the problem is if the ETF doesn't get approved and the demand really isn't there and the retail FOMO kind of dies out and people are just like, you know what, I bought it at 20, I'll just sell it at 45. I don't need to wait till 180K. Then you're going to get a lot of downside momentum. And I don't know, even if that downside momentum gets eaten up from a dip perspective, what is the catalyst, right? Right now we've got the halving and we got the ETF. And if those two things don't end up being what makes Bitcoin go to the moon, then, I mean, nothing in 2024, 2025 is going to make it happen. So we got to see if that'll be the case. And if it is the case, then we're going to see some broader momentum when it comes to Bitcoin. Let's listen to a little bit more of a bullish perspective on why the rally has some room to grow, even if we're going to come into a little bit of a sell-off over the next couple months. Here's why, at least right now, this rally has legs to keep going.
Just taking on a different look? Let's ask Dan Greenhouse, Solus Alternative Asset Management's chief strategist, and Lauren Goodwin, portfolio strategist for New York Life Investments. They are both here at Post 9. So let me ask you first, Dan, do you think the bull market is intact? It's just showing its face a little differently. Now, right now, it's a frown. The face has a frown.
It's amazing
because,
what one down day will do.
You know, we're giving a little bit back, obviously, as we start with the NASDAQ the weakest.
Yeah, I don't know that I would read too much into one day. I think, obviously, you could have on all the guys to talk about the Santa Claus rally extending into the new year. Seasonality is still in your favor. January and February are still terrifically strong months. And the function, the change in the calendar as a function of the economy or earnings doesn't really make a difference. I think the bias is still to the upside right here. There's little reason for now to be bearish. And again, that's just for the immediate future. And so I think stocks should keep going higher.
I mean, right now the Dow's down by 300, or I'm sorry, the Nasdaq's down 300. Just that number just pops out at you because it's leads to the conversation that's really dominated towards the end of the year as we begin now this new week, whether this change of makeup of the market is taking shape.
I hate being on with Dan because we tend to agree on so much, and that doesn't make for great TV.
You're not the only one who hates being on with me, so.
No, I think that the Magnificent Seven have moved higher over the course of 2023 for reasons that don't have a lot to do with a lot of the market narratives that are floating around today around rates and the Fed, et cetera. I agree that this is probably just a little bit of beginning of year consolidation, the market sort of taking stock of what we've seen over the past year, what to expect ahead. And this rally probably does still have legs, at least for a few more weeks. I don't see strong, compelling reasons why we'd see a reversal in the rally.
Yeah, I mean, are you overall more positive on the market than you were for a lot of 2023?
I'm fairly constructive on the market on a very tactical basis, but our economic view hasn't changed a whole lot in the sense that some of the boons, the reason for upside surprises over the course of 2023, largely liquidity based. And those are very difficult to anticipate in advance. And I expect that the Fed tightening cycle that we saw over the course of the year is still likely to bite here in the next few months.
But it really, I mean, it's more than that. How is it just that? We wouldn't be where we are. And certainly we wouldn't have had the broadening out as we ended 2023 without the idea that the economy is going to remain pretty decent. And we may have that soft landing that we've talked about. That talk of recession seems to be in the past for many.
We'll talk about SoFi in a second. It's down 3%, and we'll get it back into the market. But let's just finish this up.
True, but I think that there's the shift in narrative towards a real consensus around soft landing has a lot more to do with the terms people are using than the forecast that they're putting out. Most analysts and economists still expect economic growth to slow. And really the argument we're having is, does it slow slowly or quickly? And are we just below or just above 0%? And so I don't actually see that as a strongly compelling reason for the market to move higher and higher and higher from here for much longer, because the earnings outlook is still deteriorating even in a soft landing circumstance.
She's absolutely right about that, by the way. Like, if earnings growth is not there, it doesn't matter if we have a soft landing. It doesn't matter if we land on a fucking marshmallow. Like, at the end of the day, we need earnings growth to be able to justify the current multiples of the market and to be able to expand those multiples by any sense of the imagination. So she's absolutely correct on that. I think her broader point, though, is that the narrative around the soft landing is internalized. It is real. So it's ready. It's not like the Fed really has to, the market doesn't really need to depend on the Fed anymore. The market has to depend on Google, Amazon, Microsoft not crapping the bed when it comes to earnings, so that the Fed has the ability to continue to lower those rates. Going back into after hours action, we're seeing SoFi down another 2.5% on the day. That's tough. That's tough. Look at Palantir. They're barely down in the after hours. Some of the miners are up. CleanSpark is up after hours. Riot is up after hours. Truist is flat after hours. Bitcoin 44,915. MicroStrategy is up. SoFi, I don't know what tanked them 3% after hours. They were already down 3% on the day. But they're down. Yeah. I mean, I don't know if any news came out on that or there was just a massive sell-off there, but you got a red candle on SoFi falling after hours. Rest of the market seems okay after hours. You got the Bitcoin strategy ETF, the one that Kathy Wood bought a bunch of. That's up today, 6.8% and up after hours. ARK is up after hours. Verizon actually had a great day. Verizon was up 3% on the day. Verizon trying to close it on $39, down just slightly after hours. The rest of the market is red, but not like majorly red after hours. Robinhood also flat after hours. SoFi, I do not know why SoFi saw that 3% down, 2.59%. after hours. S&P at 472. S&P is actually green after hours. So S&P is still, relatively flat, which is not that bad for the S&P on a day like this when we did see some blood. Celsius was the winner today, up 8%, and Hims up 9% was another winner today. So those two companies up 8.3% did very well. Palantir at $16.58 on the day. Okay. Jay Schwa says, can somebody poke holes at my strategy? I'm planning to buy QQQ every single day until it underperforms SPY. My bet is that QQQ is a lot more volatile, but will always trend up. You know what's interesting about that? I saw someone on Twitter. QQQ, by the way, ended about 2% today, 402 after hours. Someone did a $10,000 put on QQQ for $280 strike in June 21st, 2024. And that means the QQQ would have to decline by 30%. Going into June 2024. Okay, someone on Twitter, I saw them tweet this. $10,000 hedge on their portfolio. If QQQ goes down to $280, which is a 30% decline, they're going to make $300,000. So they're going to 30x. So which is not bad. right? It's a nice hedge from 10,000 to 300,000. That's a nice little hedge right there. So from that perspective, I mean, it's if you got 10,000 willing to spare, I mean, that put on the QQQ. Now, what would have to happen for that QQQ to get down to $280? I mean, that's like unimaginable to imagine that's happening. That would mean 2024 just absolutely went wrong. I think big tech would have to shit the bed. AI would have to not really be, AI could still be real, but the monetization of AI would have to be long into 2025 because the market obviously doesn't see the potential. Apple probably would have to stop growing more dramatically. Nvidia would have to have bad numbers to get QQQ down to 480. You would have to see the Magnificent Seven not be magnificent this year. So that would be the bet, but it's a great hedge on your portfolio because worst case, you lose 10K. Best case, if the market shits the bed, you're up 290,000, which is not the worst bet in my opinion when it comes to a hedge. Jay Schwa says, my bet is that ultimately it will catch up and go back to all-time high, so I'll make a lot more than SPY. I agree. I mean, look, if I was buying any ETF, it would be the NASDAQ. It would not be S&P. I mean, like the S&P, it's so weird. The S&P is basically the Qs, right? Like 7.3% of the S&P is Apple. It's just the Qs are more concentrated in the names that comprise the S&P. So if you're betting on the S&P, you're betting on big tech, which means it's not like you're betting on the 493 companies that are special, like a Lululemon and an Uber. Like those are interesting companies, but you're betting on big tech. If you're going to bet on big tech anyway, you might as well bet on big tech, which means you just bet on the Qs. I mean, because the diversification in the S&P 500 with the other 493 companies, it's not like that diversification is so significant that if the Qs or if the big tech companies do bad, that's going to make up for it. Like Uber doing good is not going to help in Nvidia falling down 15% this year. So, I mean, if you're going to lose on big tech, you might as well lose on big tech. If you're going to win, you might as well win. And so I would imagine QQQ is a better bet as well. Oh, they got downgraded, huh? SoFi got downgraded. SoFi downgrade. Let's see if we can find the downgrade. Wow. If anyone has it, put it in the chat. It's probably going to be a little hard for me to find it right now, but that might be, yeah, that'll explain. Down Apple, we talked about Apple today. They got downgraded to 160 from Barclays, so that got them as well. Yeah, oh, wow, I found it. Oh, my goodness. Okay, so let's see. This is on Twitter. Yo, what happened? So Keefe Brewett Woods is a firm that downgraded SoFi to underperform, and that caused the 3% decline. Apparently, this is let me Google these guys. What are these guys? Keefe Brewett Woods? What is this company? Keefe Brewett. I've never heard of this. I don't know if you guys have heard of these guys. Keefe Brewett and Woods, investment banking company. Okay. I'm going to type them in and type in SoFi, see if we get any reports. Oh, here we go. We got it right here. They downgraded. Oh, fuck. This is locked under some paywall. But I got the report. They literally, this postal was 411. Dude, how is this like pseudo investment bank? They're probably a legit bank. I'm just saying this because I've never heard of these guys before. How are they messing up SoFi? Are these like, this is not a JP Morgan or anything like this. This is Keefe Brewett and Woods. What is this company, yo? What is going on? Keefe Brewett Woods. As you can see right here, they upgraded SoFi. Look at this. On October 19th, they upgraded SoFi to I don't know what their price is. It doesn't say it right here, but they upgraded them. So they were bullish back then. Now it looks like after the run, they're bearish. Is this the news? Is this the one? Oh man, I really want to see what their price target is. That's hilarious. Damn, SoFi's down 3% just because of that. Is this the one? No, this is the upgrade. I'll try to figure it out. I'll definitely know by tomorrow morning. But yeah, Keefe Brewett and Woods messed up after hours for SoFi. The analyst's name is Michael Pierto. Michael Pierto. They are boutique. Okay. Well, I guess that I'm gonna start a publication and release these reports myself, dude. It's just like you could publish anything as long as it hits the Bloomberg terminal. As long as you somehow can get your shit to hit the Bloomberg terminal, the market will take it to you. Let's go to their website. You guys see this, right? Okay, this is their website. Cutting edge capabilities for financial institutions. Are they in New York? Where are they? They got to be in New York. I think they're in New York. About our firm. What type of picture is this, bro? Is that really the picture they're using? This picture looks like it's from 1947, bro. What is this picture? Like, are you kidding me? What is this, dude? They started in 1962. Okay. All right. Where are their offices? Oh, they're in New York. Look at the background. Is the World Trade Center. New York. Oh, they're actually around the world. Richmond, San Francisco, St. Louis, Boston, Atlanta. All right. So Keith Bruden Woods messed up after hours for SoFi shareholders. Sorry. Oh, here's the link. Okay, so Chris gave me a link. Tip ranks. Let me see this guy. Tip ranks Michael Pierto. Okay, let me pull him up real quick. Tip ranks. Yo, you know what StreamYard has to fix in 2024? They're doing a good job with this software, and they're doing a really good job with they're gonna do 4K streaming. They have to let the creator actually be able to click some fucking links from the chat. I don't know if they have a safety thing or something, but I need to easily be able to click these links. That's ridiculous. You know what I can do though is I could just go to YouTube and then I could just click it from the YouTube part. Yeah, that actually makes more sense. But StreamYard, if you're watching, can you fix that? Because that's really... All right, here we go. So here's the link. Okay. So Michael Pierto, wow. He has a success rate of 64%. Is this guy kind of legit? Who is this guy? He was just there. Where did I go? He was just there. I just clicked on it. Hold on. Let me click on it again. Tip ranks. Okay, share this tab. You guys see this, right? You guys see this? Yes. Okay, here we go. So what has he been saying? He down 650? Holy guacamole. Oh my, 650. That's his downside on SoFi. Wow. That's his downside on SoFi. Dude, he has some balls. He said 650. He said, send them back to 3 weeks ago. He said, they don't deserve $10. Send these fuckers back. That's not the best. Okay, so downgraded SoFi. So people take this guy seriously. SoFi right now, let me check Webull real quick. SoFi after hours, down 2.18%. Yeah, they're down after a 3% day. Okay, so what has he got in right? What has he got incorrect? He's holding PFC. He's buying Axos Financial. He has a 64% success rating, and he has a 15% average return per rating. So per rating, he usually gets 15% correct. He's a 49% buy side analyst, 48% hold, 1% sell. So he's not really a bearish analyst. I mean, he has a buy rating on 50% of the positions that he looks at. He's a 5-star analyst as well. Am I saying his name wrong? Pierto? That's like Italian, right? I thought it was Italian, so Pierto. That's I don't know, dude. Okay, first we got this. We got Keith Bruden Woods. Now we got Michael Pierto, Pareto, whatever. Okay, so his argument is SoFi downgrade. I would love to know his logic. This is where I think sometimes it's important to have a tip rank subscription because it's a pretty good product at the end of the day. And I think they do. I mean, if you're going to be analyzing this stuff, it's nice to see it. I don't have the subscription, so I can't get further detail, but that got SoFi. This guy at KBW, a boutique investment bank firm, tanked the stock 2% after hours. He thinks there's a 32% downside, $6.50 on SoFi. Wow. Look at his buy and sells on SoFi. How do I do that? How do I do the buy and sells? Is it right here? It's in the chart. I'm seeing it right here. Okay, so he sold August 20th. He sold at the top, 1008. Yeah, that was a good sell. He held at $7. And he's saying sell now. So he's at one rating on SoFi, which was a sell. And he was correct because he made 32% off that sell. That was 1145. He basically called the top. I mean, dude, I was up 30 grand on SoFi at that moment. I should have called the top as well, but he called the top right here. So he got the top. He's been doing a nice hold. He also got some nice holds at 650. Look, on October and November when SoFi was hovering at 680 to 750, he was saying hold it. Now he's saying sell it. Now you're up about 40% in honestly, 3 weeks, less than 3 weeks. He's saying sell this sucker. You can go out 3 years. Oh, we can? Okay. Oh, perfect. Okay, cool. So he was holding around that time, holding around 595, and then he started saying sell around. Yeah, so his major sell was 1145. That was his major sell. That was his best move. Interesting. These are the other positions he has. Let me see if he has other. What else does he have? He has a bunch of banks. SoFi is the only interesting name. You can trade the University of Pennsylvania. What the fuck? What? Is that like a pension fund or something? You can trade the University. Oh, Univest of Pennsylvania, not the University. I'm a dumbass. Not University of Pennsylvania. I was like, what? You can trade futures on people's majors or something? What's going on here? He has a ton of banks. So he's a financial guy. He's looking at SoFi purely from a financial perspective. And I guess he's thinking it's really overvalued at $10, 32% downside on SoFi. All right. Well, he is a bank analyst, as Chris said, and he's bearish on SoFi. We got to talk about this, Chris, today on Finance Junkies. We got to talk about why this guy might be so bearish on SoFi. Dude, you know what's so interesting about SoFi? Everyone was bullish at 11:45, including me. I was up a lot of money, as you guys know. And then it came all the way back down to 640 after a really monster earnings in October. And the whole narrative became so bearish that it's a stupid bank. I was, quite frankly, promoting that narrative a little bit, but I didn't say it was a stupid bank. I was just like, look, it's not going to get a tech multiple compared to Palantir because Palantir was running to $21. So I was like, it's a bank. Like, it's not that it's a bank. It's like, it's hard to talk about SoFi for that long because it's a bank. It's not that exciting. Whereas Palantir, you can make years and years of content because there's actually stuff to talk about. But then the Fed pivoted. And I said this in the market open. I said, and I publicly said, I didn't think SoFi deserved the rally up to 10. Because there was nothing that happened. It's not like there was a crypto pump that is correlated with transaction revenues. It's not like interest rates actually came down. It was just the pivot that they were going to come down. I mean, at the end of the day, SoFi is still unprofitable. Now they're going to be profitable soon, but the move from 680 to 10, I felt like 680 to 880 would have been, but to $10 was like, whoa, that's running. And so the question is now, does it have enough momentum to sustain those $10? And if it doesn't, then it's going to come back down. I mean, it's going to come down. If it does, then it might continue to hold at least this $9 range. I think I'm going to get us a tip ranks membership as well for the junkies because we got to use this. It seems like it's pretty valuable to have this information updated real time. So I think it's also like $250 per year, which is not crazy if we're using this every day. Like it's not too, especially if we're looking at all the stocks and all these analysts. $250 a day is $250 a year is not the worst thing. Their app stinks. Yeah, I mean this is the same thing I've been saying. The app sucks. I mean, I don't care what bull is watching me right now on SoFi. The app objectively sucks. It just sucks. I'm sorry. It just sucks. Let's do a little test. Let's see how long it takes to load. Okay. We'll do the test live. Maybe it does well. Maybe it doesn't. Here we go. Just pressed it. Do, 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 do. Do, 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 do. All right. So that was a good 15, 20 seconds just for this bad boy to load. I mean, it's better than it was before. A couple months ago, that was like almost 50 seconds, but it's just not a good app. It's just not a fun app to be working with. And so at the end of the day, I don't think you're investing for the app. I think you're investing for the loans business. You're investing for the member growth. You're investing for the deposit. There's so much stuff to be bullish on for SoFi. So don't get me wrong. I'm not bearish here by any sense of the imagination. I have money in SoFi. I think SoFi is going to do well. My sister has a decent amount of profits she's sitting on SoFi. I want SoFi to get to that $12, $15 range. I think it'll get there. But the move to $10 just seemed a little premature for not having a reason. Like Robinhood from 8 to 13, people are like, oh, that's too much. Well, crypto is like 92% of their growth in terms of transaction volumes in October, 75% in November. It's probably going to be close to 80, 90% in November. Or December. So there's a reason to see the increased volumes, and they're getting that 1% fee. They're bringing on thousands of people from Europe. Like you can make a thesis pretty obviously, especially when they're sitting on half of their market cap in cash. And it was at $8. It was more of their cash than their market cap. It was insane. SoFi is not at that type of valuation, in my opinion, especially because it's not profitable yet. But it will be eventually, and it'll get there. ET says, can you show us how to input your email and password for educational purposes only? Yeah, that's a good idea. I should show that. That's a good idea. Okay, so that is the breaking news of the market close. This is why it's fun to do market close, because we get breaking news like SoFi getting downgraded by some boutique analyst to 650, and that crashes the stock 2%. Let's do word of the day. Oh, this is a fun one. You guys will like this. This is a fun one. I like June's idea. So in the market open, we will do word of the day. And then in the market close, what we're going to do is financial word of the day. It's ironically, June, Chris called me around New Year's Eve, and he was thinking of that idea as well. Chris literally said, yo, you should do like a financial word of the day, like a peg ratio or something like that. I love the concept of pegging, so that the ratio of that makes a lot of sense. And so we're like really discussing those financial terms at the end of the market close. I think is really good for this tight knit community, getting more deeper financial knowledge and like breaking it down. It forces me to study these terms and try to understand it at a better level. And then in the market open, we can just discuss like fun words for the day so that we can use throughout the day. And one of those words is flapjack. Okay, so that is the word of the day. We got flapjack, a pancake or a griddle cake. I don't know if Jeremy has infiltrated our live stream, but you got to be flipping my flapjacks because that is the word of the day. Now, we'll talk about this more tomorrow, but Jeremy bought Alibaba. And I have some thoughts on it. Maybe we'll talk about it on Finance Junkies as well. We'll discuss more tomorrow because we got to end it out now. But I actually think it's not the craziest buy, dude. I know the China thesis is there, and it's like, yeah, like don't buy China. But if you look at the numbers, it's really undervalued. Like, I know everyone's been saying it's really undervalued for a long time, but who knows? Maybe we need to look a little bit more into Alibaba. We'll discuss and we'll talk that. All right, that's it. Thank you, everybody. I will see you guys later tonight. We have another stream. So that stream I was going to do with TJ, that podcast, he just texted me. He's driving back from Houston. That's going to have to be tomorrow. Every week it'll be on Tuesdays, but that'll be tomorrow because he's driving back. He's going to come a little late. I am starting a podcast with Chris as well. Me and Chris are going to be doing a macro type of podcast that's likely going to be on Mondays around 5 to 6, 6 to 7. So that'll be starting next week on Mondays. And then the Palantir Deep Dives live stream, that'll be here tonight, likely 8 a.m. or 8 p.m. 8 p.m. We will be starting that. So we'll be doing that live stream tonight. That'll be for like 45 minutes, 8 p.m. to 8:40. That'll be right before Finance Junkies, and then Finance Junkies at 9 p.m. today. All right, that's it for me. I will see you guys later in the day because you haven't gotten enough of me today. We've got plenty of hours left to spend. And have a good dinner. And I'll see you guys later. I can't say have a good day. I can't say have a good life because I'm going to see you guys tomorrow. I'm going to see you guys later today. Have a good dinner, and I'll see you in a couple hours. I already ate my dinner. I had my one meal today. I had my fish and rice and vegetables, so I'm done. I'm just going to go work out after this now and get ready for further streams. All right, that's it. Thank you, everybody. I will see you guys in a couple hours. Have a good one. Bye-bye.